To build anything that truly lasts, it takes time.
Equities at LGT Wealth joining us on the show. Hi Chakri, morning. Good to be speaking with you. And firstly, a lot of earnings that are going to be in focus, and let's start with Paytm because that has actually turned black, because this time the company has not just reported a profit of 123 crores, but along with that, the management also sees significant improvement in the margins towards the year end. So on all the front, the company has been performing and it has managed to regain the investor confidence as well. But Chakri, from these levels, from already the kind of surge that we have seen in Paytm, how much more headroom do you believe that the stock will still have, as well as how do you say the earnings can move from these levels?
Good morning. I think you highlighted a couple of very important points. One is margin improvement, and second is shareholder trust. Both these things have turned positive for the company. They're improving vastly, and that is the key. Now the volumes in the business have to match up going forward, given that the stock has run up fairly significantly. But however, with each margin improvement in the succeeding quarters, you'll see a valuation improvement. So it'll be an incremental increase and not those big jumps that we've seen.
Right, Chakri, hi morning. So that's your take on Paytm. But Chakri, what about Dixon Tech? Another strong quarter coming in. In fact, another earnings candidate that has done very well, very strong moves coming in on Dixon Tech in terms of their financials led by the mobile segment. How do you believe this company as well as the industry could shape up going ahead?
The industry hopefully will do well. When I say hopefully, it's based largely on the tariff numbers. But Dixon in particular, their first quarter numbers were very good. Their execution seems to be, doing well. Their mobile business, which is also a very important component, is shaping up well. If you add up all this, their margins are improving. So this will sustain the valuations of the company, and the valuations are because of its long-term growth rate, secular growth rate over the next 2-3 years is north of 30-35%. So therefore, as long as you can see this improvement, I think the stock will do well.
All right, but Chakri, from these levels of almost 16,000 odd rupees for Dixon Tech, how do you see the stock moving ahead in terms of any target that you have in your mind with respect to Dixon? Because there's always a debate of higher valuation, yes, of course, backed by growth, but for how long this can sustain?
Growth, the runway is fairly long. It has several years of growth. Largely it has been held back because of the confusion around what will be the tariff rate on India and therefore on various components. And in terms of, if you put a multiple slightly higher than where it is trading now, the stock can pretty much hit, I think, around that 19-20,000 over the next few months.
Okay, so that's the take on Dixon. But Chandan, any chart check on Dixon Tech as well as is Zensar Tech? It's been in line to rather neutral quarter coming in. No big surprises on this front. Chakri, any takes on this sector or this basket of the entire technology space?
In this sector, when we've seen TCS HCLT report, we've seen that the earnings were kind of reflected the uncertainty in the US. Because of the tariffs, discretionary demand still continues to be weak. Our order book, on the other hand, continues to remain fairly decent, but however, the conversion remains still weak. So this story is likely to continue across all the entire IT as a basket until we know what the tariff levels are, because all the US companies are not just dependent on the India-US tariff, but the US demand in the US for technology services. And that, at least in a couple of months, we won't have any clarity.
Some other, stocks or segments in focus will continue to be defense. There is positive news flow for HAL given the Tejas aircraft demand. Remember, IAF is looking to retire the MiG-21 Bison fleet after 62 years, and the Indian Air Force is going to be retiring these fighter jets by late 2025. The MiG fleet will then be replaced by Tejas aircraft as per the news reports which were doing the rounds yesterday. Chakri, still holds the defense names close to your heart?
Yes, these companies have done very well. HAL has done very, very well. But still after all this, there is a pause because now the order conversion, people will wait and for it to catch up a little bit on the valuation. So the stock is clearly worth holding on to. And these incremental orders will give it that marginal uptick. So no big bang like we've had in the last few months, but the stocks will continue to do well.
Right. Rudra, what is your reading on the charts? HAL, Cochin Shipyard, the entire defense pack, BEL, anything that's looking like a level where you can look to add positions at these levels?
Aisha, definitely for me, HAL looks very, very strong. Buy at current market price, HAL, and even any dips you get in this stock to levels closer to that 4,500 will be a buying opportunity. I understand the move has been very swift in short term. If you specifically see the chart from levels closer to 3,000 non-stop, we saw a move in HAL towards that 5,100. And now the stock is consolidating, and for me, any dip in HAL from current market price towards that 4,500, it is a very strong buy. And if you hold it in your portfolio, I won't be surprised to see HAL giving a 30-40% kind of a return even from current level for next 1 to 2 years. And the similar chart pattern and second best stock to buy from defense for me will definitely be Bharat Electronic. Yes, again this stock having seen a big move from levels closer to that 250, non-stop rally was there in BEL where you saw the stock moving till 430. So from 430 some amount of profit booking is seen now, and for me every dips to levels closer to that 380 from current market price will be a big buying opportunity. So buy BEL, and I even see HAL and BEL outperforming in defense, and specifically these two stocks can give that 30% kind of a return in next 1 to 2 years.
So that's the take coming in on the defense pack. Let's watch out for the counters that Rudra just highlighted. But with this, let's also welcome on board Rajesh Pal. We are joining us on the show. Hi Rajesh, morning. Good to be speaking with you. And Rajesh, some people gather could be a repercussion. Do you think in the interim, these capital market plays have actually seen their peak?
Clearly the volumes, or retail volumes at least, are likely to come down. And, the margins for the brokerages, meanwhile, will take a hit as a result. The stocks have done very, very well, as you know, as you said. And therefore, they're likely to take a pause because what will the volume settle at finally remains to be seen. It'll probably be a good at least 25-30% lower volumes wise than where they are today.
Okay, so that's the take on that. But Chakri also wanted your view on the entire wires and cable space. Amid all this news flow, we've seen some mixed earnings coming in because good show from Polycab, weak from Havells, and KEI seems okay other than some nominal margin pressure. How are you viewing the entire wires and cable space at the moment?
This as a segment clearly is dependent on the overall economic revival because their cables is used across various industries. And against that backdrop, as this whole tariff thing gains more clarity, and we will know it hopefully in a couple of weeks' time. And then you will have companies, that is the companies who buy from Polycab and the others, firm up their demand. And until then, I think, the stocks have largely corrected. They've come up a little bit, but they're still okay valuation-wise.
All right, that's the take coming in on wires and cables. But Chakri, why do you think that the pharma is underperforming off late? barring select CDMO players, select companies within the small and mid-end, if we look at the stock move recently with respect to large generic players, the ones catered to the US, why do you believe that there's a bit of an underperformance there? Is it only the tariff overhang, or do you believe that the sector overall is facing some other pressures as well?
I think this word tariff we've used this word so much in the last few months, and we'll probably continue using it. And until that settles, that kind of volatility and what is the number is likely to play on the minds of investors for different sectors. Now, the number for the Dr. Reddy's and other pharma companies is likely to be far lower than what is feared, and therefore, if there's any weakness in pharma, we would buy into.
Okay, so that's the take on that. But while we're talking about the earnings candidates, let's also throw some spotlight on the ones that we're expecting to see today. 3 nifty companies, out of them, one of them is going to be Infosys, and that's all set to release its numbers. While the street is expecting pressure on profitability, what else is on the radar? What can we expect? And what are going to be some important factors to watch out for when the numbers do come out later today? Let's go across to Pulkit to find out.
After TCS, Wipro, HCL Tech and Tech Mahindra, now it's time for Infosys. So if we talk about the expectations from Q1 result, in the USD terms, the revenue could be up around 3%. In INR terms, we are expecting around 2.3% upward movement in revenue. If we talk about EBIT, we are expecting somewhere around 3% up. If we talk about EBIT margin, we are expecting it to be flat, around 21%. And if we talk about profit after tax, we are expecting to go down by around 3.5%. If we talk about the management commentary expectation, we are expecting the deals to be stable, around $2.5 billion. We are also expecting a weak discretionary spending in manufacturing and retail segment clients. We are also expecting the guidance to be maintained, that was around 2 to 5% in the growth, and for the margin part it was around 20 to 22%. Company had given this guidance in the last quarter, so we are expecting that company will maintain this. The key monitorables that will be to watch out for: US business and the BFSI segment business, how it is performing for the company, the deal pipeline and the Gen AI impact on the business, any changes in the FY26 guidance that company had given in the last quarter, what is the outlook on the discretionary spending from the clients, and the most important thing and the last, that is headcount and attrition trend, how it will perform. Once the result will be out, we will update you.
Well, yes, all eyes on Infosys earnings, but off late, Chakri, the IT pack hasn't been doing that well. It was just Wipro that managed to give some boost to the sector overall, especially with respect to the strong deal wins and the outlook going ahead. But what is your expectation when it comes to Infosys? Because Infosys also manages to surprise us sometimes, but this time, are you expecting one?
The surprise will be, positive surprise will be if they can hold on to the margins as expected. The deal pipeline, will look around that number, I think. And, the conversion is the key, and that conversion is also unlikely to improve. So if they show any improvement there, then you'll get that big uptick. But again, with the same word again, tariffs is the key for the sector catalyst. We'll have to wait, but not the time to go out and buy big time. But as long as it's about the 2.5-3 billion, I think the stock does decently well.
Chakri, what's the take on SBI? The QIP, of course, the shares get onboarded today. The futures and cash both are now at 817 rupees per share. Just wanted to understand what you think is going to be the implication of such a large fundraise. Many believe that this is also going to perhaps add to some weightage on SBI when the MSCI, FTSE rebalancing, etc. happens.
SBI is extremely well placed in my opinion, for the simple reason now that having raised this capital at 25,000 crores, The book value, as a result of which, looks far more attractive. The price to book multiples adjusted will come down further, so it will now come closer to 1 time. Now it has the capital, 12.9, I guess, is the number, tier 1, which will help the company lend more easily, and its NPAs are firmly under control. I think the stock very easily goes up another 20-30% from the current levels over the next few months.
Okay, so that's a very positive outlook coming in on SBI. Let's talk about the other major Nifty 50 earnings that's going to be coming out today, and that's Tata Consumer. Now, we're seeing a mixed set of quarter from Tata Consumer this time around, where all seems to be okay. A little pressure on the EBITDA and EBITDA margin front is what we're seeing. The biggest concern is going to be the shortened summer season and the